Hi everyone, welcome to Trading Wars, and we're here for another day on the battlefield. It looks like there was some great intraday price action today. We had some very strong short setups, some potential long setups, and I'm going to be breaking it all down. I'm going to look over a detailed analysis of the S&P 500 for the intraday price action, and if you're ready, let's step into the war zone. All right, everyone, welcome back. Thanks for joining me today. So like always, the first thing that we need to do is establish a support and resistance going into today's price action. So we have a nice gap up today. Like I mentioned yesterday, with the bulls kind of trending into the close, there's a high chance that we kind of continue. And this was the continuation for the bulls. So right off the bat, we have to draw support and resistance. We're going to use yesterday's high, yesterday's low, yesterday's close as support. And going into today, there's definitely a bias to be going long. But where we open is so extended that you have to ask yourself, is this really a good place to buy? And the answer for that, we definitely have to look at the overnight action. So let's go to an hourly chart on the futures market. And we could see that we were trending higher overnight. But when we opened, we were significantly extended. We were outside of the Bollinger Band, which usually leads to some type of retracement. So going long right off the bat was definitely risky. And if we think about the psychology, the bulls that we're holding since over last night are up huge on their position. So what would they want to be doing? They want to lock in some profits, right? So this is why we have this cataclysmic drop, because as the bulls are trying to lock in some of their profits, their stop losses are getting triggered, and we have events like this where we have the fast, quick drops. So establishing the bias into today, definitely because of where we open being so extended, you would be definitely looking at short opportunities. But at the same time, for long, you really want to be playing long at the support levels that we draw. You don't want to be going long up here in no man's land. Okay. So what were the actual setups? So let's talk about the short setup. So with the short setup, you had your beautiful inverted hammer gravestone doji right here. You would bracket that short below the low, stop above the high, and you would write it into support, right? So either here, here, or here. And one thing that I really wanted to point out is how you can hold on to these winners and really get these big targets is simply by trailing. And if we look at these candles, we can see each one of these candles are making a lower high. And if you simply just trailed each high on the way down, you could have easily locked in between 4 to 5R on the day. So I've been conservative using a 4R as the potential for the shorts today. But, this is a textbook setup. Stops getting hit from the night before. The bulls taking their profits, the short stepping in. And then now we're going to look at what you could have done as a long bull trader. So like I mentioned, the momentum doesn't change going down here. We have lower highs constantly. So that in itself is an indication of weakness for the bulls. So you really can't go long until we have this transition over here where we have a break of a swing high. And this shows momentum for the bulls. So you could have easily bracketed this entry above the high, stop loss below the low, and you would hit one-to-one, as I outlined here. So you could easily make one-to-one depending on your system. We see that it did become a nice, beautiful double bottom. But depending on your system, you take one-to-one, or definitely you have to get out at break even once we start approaching targets here up into these previous areas. You put your stop at break even, comes down, hits you out at the end of the day, not a big deal. Come back tomorrow, new day, new bias, new outlook. So just to illustrate, the P&L on a 20K account, we're going long. You either would have got that 1R or break even. So that would have been plus 400 on a 1 to 2% risk. Short, at least 4R, I would say, plus 1600. Big day for the shorts. And then I want to quickly look at what we're expecting tomorrow. Let's go back to the futures chart. So like I said yesterday, we had that big green candle. We did get a new high as expected. With this type of candle, very dangerous. It's a trap. People buying breakouts, getting trapped. Short stepping in, inverted gravestone right here. Definitely can see some follow through for the shorts tomorrow, but we have to see what happens overnight first. And again, guys, the main point I want to really talk about is trailing aggressively here. When you start coming into targets, if you're short, trail. trail. Don't get greedy. Do not get greedy. Okay, trail as you go down. And if you're long, know when you got to go to break even. Do not let a winning position go back on you and become a loss. Okay, guys, thanks for joining me. Please comment, like, subscribe. If you have any questions, am I going too fast? If you need some explanation on some basic things, let me know and I can do separate videos for that. All right, enjoy the rest of your days, everyone. Take care.